So today we're going to do an update into Tattooed Chef and we're going to see what's going on with stock. So really since November time when the whole market started dropping, this started dropping as well. And you can see here it came through a SPAC at $10, went all the way up to $16 around November time. And then when the whole market started dragging back, this started dragging back as well and has continued down nearly 89%. So I think some of this is being caused originally by the poor performing market, but I think now it's also being dragged down by the fundamental performance of this business, which has not been good in 2022. And it's important on this channel that we talk about the good, which we have talked about recently. You know, we recently did a video on Celsius and how well that's doing, Card Factory and how well that's doing, but it's also important to talk about the bad and not brush it under the carpet, not hide it. We've got to talk about what is not performing well in this business. And this is why I really started the channel. I like to look back at what I've been saying. I look at the videos that I've said and what kind of changed with the business. And I think that's really important to keep up that transparency and not start avoiding talking about a stock like other channels do just because it's going down. Now this has always been my approach on YouTube, but especially now we're in the bear market, no doubt me doing this video will attract some negativeness because talking about a stock that's down automatically for some reason attracts some negative people in the comment section that seem to think that when you have a 30 stock portfolio, 30 of them stocks are going to be up over 100% automatically. It's not going to happen. If you are a stock picker and you have a couple of higher risk stocks, some of those higher risk stocks will perform absolutely amazing. The likes of Tesla, the likes of Square, for example, over the years. Also, some of them stocks will perform badly, unfortunately, and that is part of the game of investing, being an individual stock picker. Some people can't handle that for some reason. And also I believe that some people just generally like to be negative. I don't know if it's just because their wife shouts at them all the time when they're at home and they need to take their anger out somewhere, or they just generally have a horrible job and they hate the day and they need to type their hate somewhere on the internet. I don't know what it is, but if you are here to kind of learn and improve as an investor, which I'm always trying to do, hopefully this video is for you and we can kind of assess here what went wrong for Tattooed Chef. So Tattooed Chef, we're going to have a look at the earnings in the last few years and see the decline Q3 in 2020, Q3 in 2021 and Q3 in 2022 and see the difference 12 months between each quarter because that's when it has been on the stock market. Now for me personally, Tattooed Chef, I did own some shares in Tattooed Chef, but for me I actually did sell some of my stock out in 2021. Which I did actually quite well because I walked away with an actual profit. For me, I actually have a very decent average compared to where it came on the market. And I was able to sell some shares out at some profit around about the back end of 2021 before the market tanked. And the reason why I did that, you could see from this video, my thesis started to change in the business and I started to see some bad performance into Q3 2021, which was really important because by then I took some risk away, I sold some of my position, and I also didn't chase the stock down through 2022, which would have been a very costly mistake if I did that. I didn't follow buying on with the stock, which was a positive here. And you can see here, this is a video from 6 months ago, but I also did a video 12 months earlier talking about selling the stock. And from this video here, you'll be able to see me kind of talk about why my opinion started to change a little bit in this stock. So if you don't know my story with Tattooed Chef, I was quite bullish in Tattooed Chef previously through 2020 as it came through the SPAC towards the midpoint of 2021. Unfortunately, through the midpoint of 2021, at that point, unfortunately, there was a few errors made by management, in my opinion, and I was a bit disappointed with the performance and the management through the back end of 2021. There was delays in earnings, there was a lot of strange actions about gifting shares, and the biggest thing is management weren't meeting expectations and their own expectations as well. And the combination of a lot of factors here meant that I lost a bit more of my bullish opinion about Tattooed Chef as the more 2021 went on, and it actually led me to releasing some capital and selling some shares in Tattooed Chef. So I sold off a bit of a chunk of my position in Tattooed Chef. So me having this change of opinion did really help me with the position and not chase a falling knife really. But when we look at what went wrong for Tattooed Chef, this is what went wrong. So when we came onto the stock market in 2020, this stock was performing pretty well. Obviously, they adjusted from being a private label company into a Tattooed Chef branded product, and you'll see here that it was a really good performance. Revenue was up 65%, which was key as a growth stock. You're able to see that the Tattooed Chef brand actually grew really well, which you'll see the Tattooed Chef branded product revenue was up 288%. You'll see here there was a net loss, but the net losses weren't massive, and adjusted EBITDA was actually 1.5 million. So they're actually in a pretty good cash kind of position here where they're not burning through much cash. They've got decent-ish gross margins, and the key thing is the Tattooed Chef brand is going at really good rates. Now, fast forward 12 months down the line, which is where I started to release some capital. Unfortunately, there were some negative signs a year on. So when we got into this point of view, you can see here quarterly revenue was up 44%. Branded revenue was still improving pretty good though, that was a good thing. The problem is at this point of view, we started to see gross margins at the moment come down a little bit, but the big thing as well was adjusted EBITDA was moving into a negative direction to a positive. So we saw the losses coming down even though their branded product, which you would hope gives them better margins, better gross margins, and also helps them in profitability, was going to support the losses. So there was a little bit of sign here that, okay, the revenue story is still intact here, but there was some worries around that gross margin and adjusted EBITDA. Now, the thing is that we looked at it and saw that we went from, I believe it was like 2,000 stores a year ago up to 13,000 stores. So you're like, okay, that's a good position. And they're going to move into more stores. So you're thinking more stores will translate into revenue and potentially that'll be in a good place for the business. And that's personally for me why I still kept some shares 12 months ago, because I thought, okay, if they keep doing this and adding more stores, surely the scale will help the business move them up into, more revenue, better margins. It's a branded product. They'll, the product's selling at nearly $5. That'll help the gross margins moving to adjusted EBITDA basis. But at the same time, this is when I did release some capital because of the adjusted EBITDA moving into a negative direction. And also there was some strange actions going inside the business, which I do actually talk about in this video. And also when I did sell my shares, which was around, there was a few issues. There was delayed results, which wasn't great. And I believe one of them was actually on the day of earnings, like an hour before. There was the situation of the CEO Songaletti like gifting shares away, which was really strange. There was heavy amounts of bonuses going on. There was the CFO leaving in strange circumstances as well. I think there was something else that I can't remember exactly. It might be worth checking this video. But on this video, I kind of go through the reasons at the time. There was a few insider things kind of going on that was making me a bit worried and a little bit nervous in the management team as well. So I was kind of, the combination of the losses and what was going on with the management team made me take some capital off the table. Now, fast forward into the recent earnings for Tattooed Chef. Unfortunately, this then deteriorated a lot faster than what even I was expecting. When we moved from Q2, if you go on Q2 2022 to Q3, Q2 was poor. It was a poor quarter from Tattooed Chef, but to move into the way they did into this quarter was a complete meltdown on the business. Net revenue was a decrease, which you don't want, and the Tattooed Chef brand was more underperforming than the private label. The private label actually had some decent growth compared to the Tattooed Chef brand. Gross loss of negative 7.2% compared to gross margins of 8.6%. So they're basically making products and selling them at losses. So the product had a massive gross margin decline in these 12 months, which wasn't great. And you'll see here, this is what took everyone by surprise in these earnings. The adjusted EBITDA loss was 25 million. This was a massive loss than what was expected. And probably we should have seen Tattooed Chef probably come out with preliminary earnings on this day or a few days before. I think they came out on the Friday, and it was like, okay, they did preliminaries on the Friday and they actually brought the real earnings out on the Monday. And it was like, that was pointless. If you're going to do preliminary earnings, it needs to be like a few weeks before. Like, we're not going to meet the numbers expected. And you can see here, like the revenue was, obviously the Tattooed Chef brand's struggling, and obviously the SKUs that we keep getting told about, sorry, not the SKUs, the amount of stores that they're in, keep increasing, and it's not translating into the sales. They talk about the SKUs, but there's no point having SKUs if you're not having sales. Maybe we need to focus on the quality of the business. Gross margins are declining, probably because of the sales. Also adjusted EBITDA, obviously that massive losses. And then obviously they made a big acquisition. The big acquisition they made didn't pay off for them, and that burnt through a lot of the cash pile that they had. They were in a quite healthy, strong balance sheet 12 months ago. They made an acquisition that went through the cash a little bit, and that acquisition that they made burnt through the cash pile. Now the losses have increased. They are basically running out of cash very, very quickly, which was just an absolute mess. So clearly there's a problem with the product here, and obviously there's been poor management by the company as well in the last few months. So overall, that did not lead them into a good position, and unfortunately with the balance sheet they have now and the losses that have jumped up so much and the product struggling for sales, which is probably impacted by the environment they're in, they're probably being hit by a few costs. Obviously we're in a bit of an inflationary environment, the costs have gone up, but as well we're seeing probably consumer spend, which seems a trend in this sort of industry, come back. People are not switching to the healthy eating as much. Also, the competition in the last 12 months has increased massively. When you go to some of the supermarkets now, you'll see the competition has really ramped up, which obviously is probably hurting them. And overall, you've had a product which isn't selling well, probably not selling well because of the probably management team not doing well. And unfortunately, this company has very much deteriorated rapidly in the last 12 months. And unfortunately, by looking at what is going on in the business at the moment, I would say that there is probably an 80% chance that we do not see this company exist in 12 months time, which is a rapid descent from where we were 12 months ago, and is obviously very, very poor performance from the management team managing this business at the moment. Now, looking back from my point of view, what do I think of this business? Well, I'm happy that me as an investor realized back a year ago that this stock was not performing well enough, and I took some capital off the table. I sold a good chunk of my position and I saved myself a lot of pain here. However, I still own some shares in this business, and obviously it's disappointing to see the performance of this business in the last 12 months. So it's a bit of a mixed bag here, that I was happy that I realized this wasn't performing. However, obviously, at the moment, I'm going to probably still get stung by this Tattooed Chef performance. And probably the thing that I'm going to take away from this investment is that, unfortunately, or should I say, I should have been more strict with myself. If I was willing to take some, money away because I wasn't happy with the management team 12 months ago, rather than keeping some cash in, I probably should have just cut all ties. I mean, obviously in hindsight, I should have cut all ties with the business. I had the worries, and rather than just protecting some capital, I should have gone, there's a million stocks out there. Don't just keep it in this one stock. If it goes up, it goes up, but it's better than it, completely going down. And that's what I should have thought as an investor. And that's the error that I made. So I look at this in a positive, that I made some right decisions, but I also look at it as a negative that I didn't make some right decisions as well. And for me, that's probably what I'm going to walk away with, is that if at some point, even if 10%, 20% of me loses a bit of faith in management team, don't just pull a good chunk of your position, pull all of the position. And that's what my thoughts are on this. And at the moment, it's not in a good place, and there needs to be a rapid turnaround for the business to go into a positive direction from here. That's the update on Tattooed Chef and my thoughts on it. Hopefully gives you some information on what I was kind of looking at the time, some thoughts on what I thought of this investment and what I'd probably change about this investment, and the things that I took away moving forward from this investment, and probably the probability of what are the chances of this position really pulling through now, which I would say doesn't look positive at all for this business. Unfortunately, I think this will be one of my stocks that doesn't fulfill what I was hoping for. Unfortunately that sometimes happens, and hopefully there's been a few learning curves from this one as well. So hope you enjoyed the video anyway, talking about this one, guys, and hit the like button, and I'll see you on the next video.